Hey everybody, JD here with Fireside Trading videos. In today's video, I've been thinking a lot about risk and really thinking about it maybe from a different perspective, especially considering the financial textbooks and their teachings on risk were all designed in a period of time in the markets, and I'm talking about equity risk, mind you. Meaning stock market risk, investment risk in equity securities. And that's a key component of my discussion on risk. And specifically, Palantir's earnings today came out and knocked the cover off the ball. Here's a company that is truly firing on all cylinders in an industry that is going gangbusters, literally rocketing to the moon. And yet the stock, after such a stellar report, was down some 8%. And by all accounts, can only be described as a manipulation by short sellers. In fact, noted short seller from the big short notoriety, the man who identified he wasn't alone. There were others, including myself, mind you, that were short the housing sector, but he certainly got most of the notoriety for literally taking hedge fund assets and deploying them in a way where you can't think of a bigger home run. So the news that came out today was this particular short seller was short Palantir stock, also short Nvidia stock. This news came out before the market opened. And if you go back a day, Palantir's earnings came out after the market closed the day prior. And again, the market reaction to that stellar report was to send shares higher initially, right? So what changed? Well, the news reported widely by the Wall Street Journal and Bloomberg, among other outlets, had an impact on not just Palantir stock, but the entire market. And one thing that I believe in is that given the massive amounts of dollars in passive strategies, those passive dollars are being invested in a way where they are taking maximum risk for the smallest of potential rewards. Here we are once again at a precipice where, okay, is it a bubble, is it not a bubble? I'm not going to opine on that. Again, the point of this video is just simply to talk about risk and understand risk from maybe a different perspective, because I think it's informative. And I'm going to be asking you all a question that you can answer however you choose. I have my own answer to this particular question, but I'll get to that in a moment. So back to Palantir, the manipulation in the market and the fact that a passive investor, again, is just sitting on the sidelines, getting whacked upside the head by an event that is seemingly out of their control, and there's not a thing you can do about it. And to me, that's a scary thing, an investor. And in fact, I would guess if you asked at random 100 investors what they were most fearful of in the top 5, would have to be market manipulation and being whipsawed or caught in something like the flash crash, for example. Or, now I'm dating myself, back to the 1987 stock market crash, right? So you have all of these crash events, the 2008 housing crash, the dot-com bubble collapse. It, to me, again, would argue that to what we are doing in Fireside Trading, building $1 million portfolio with intraday trading that exploits arbitrage opportunities and inefficiencies in the market, the outsider would look at the structure of what I just said for Fireside Trading and determine, well, that's crazy. That's super high risk. And mind you, that professional probably has a bias, okay? Is not really giving you an unbiased opinion on the subject of risk. So it's fascinating to me that most investors today do not realize and do not understand that when they are buying an equity security, they are buying common stock, right? Which in a liquidation event is pretty far down the chain of creditors that ultimately get paid upon liquidation. And in fact, if there is a liquidation, in most cases, the common stockholder is going to be walking around with an empty bag. There's nothing coming your way in that scenario. So I'm not suggesting that you don't have a long-term investment portfolio, but I do think it is unfair to categorize intraday trading as quote unquote, well, that's risky. So let's talk about the question that I want to ask you all. It's a would you rather kind of question. And it's based on one hand, having a $100,000 portfolio that generates a 10% return, right? Or would you rather trade on an intraday basis, exploiting arbitrage opportunities in the options market, mind you? Again, the uninitiated would say, oh my God, now you're talking about intraday trading and you're talking about options, massive amounts of risk, right? And all of these old wives' tales on risk are designed to scare you from achieving and ultimately achieving your ultimate goal, which is for us building $1 million portfolio. And again, on a what would you rather have, break it down, okay? The $100,000 portfolio that generates 10% per annum, okay? That's above, mind you, the historical returns of the major market indexes on average, right? That number is, say, 8%, okay? So we'll give those passive investors an extra couple percent, and sure enough, in the last 3 years, markets have been on fire, and I get that. Again, I'm not suggesting you abandon your portfolio that invested for the long term, but I'm just trying to get you to look at how you understand risk and maybe looking at risk differently. So going back to that $100,000 portfolio, a 10% return annum is a return of $10,000. Now, if you were to achieve the same thing on an intraday basis, what would that require? How would you generate a $10,000 return in your portfolio on an intraday trading of options basis? Okay? There are approximately 250 trading days in a given year. Okay? We start with that assumption that if our goal is $10,000 and there are 250 trading days in a given year, we need to generate $40 of returns on a daily basis, right? So 40 times 250 is $10,000. Well, when you look at it that way, $40 isn't really a whole heck of a lot. And on an intraday trading of options, how much capital do you have to allocate on an intraday basis in order to generate that $40 per day? Again, this would match the $10,000 portfolio. Well, it's a simple mathematical equation of returns generate that kind of return on an intraday basis, assuming you generated 10% in returns on any given day. Okay? Now take that $40, divide it by the 10%, and you get $400. Okay? I got the $400 from, right? So, okay, now this is starting to come together, right? If my trading strategy can generate 10% each and every day on average in intraday trading, I would argue and contend that in a lot of ways you're taking less risk. The key, of course, is do I have a strategy that consistently delivers that intraday return of 10%? Now, I don't know about you, but allocating $400 on a given day, again, on your personal situation, that is not a large number, okay? It sure beats that $100,000 portfolio that's, the last year to date has taken a magic carpet ride of roller coaster epic proportions, right? April swoon on the tariff terrors alone is enough to give an investor lots of angst. So it's not like that 10% return is coming, quote unquote, risk free, right? We're not talking about risk free returns like you might receive by owning treasury securities. We're talking about common stock. And the way the markets gyrate to get to that 10% return, especially in today's market environment, again, where the risk of a correction, you hear it almost every day now, we're due for a pullback. Is it going to be a 10% correction? Is it going to be another bear market? How's the economy doing? Does it support these valuations? That's what investors were asking today about Palantir. They were saying, and one in particular was saying, this is BS. These valuations are crazy. I don't care what your earnings growth is. I don't care what your revenue growth is. I'm shorting the heck out of this stock. And it is sad to say that those large hedge funds and institutional traders have more sway in the market than you and I with our measly $100,000 portfolios. Okay? A $100,000 portfolio cannot not ever be able to manipulate price in the market. Maybe on a pink sheet stock, a true penny stock. Okay? We're not doing that, obviously. Okay. I just think it's fascinating then where my allocation of $400 in a strategy that generates 10% on average in a given day. I'm okay, by the way, if, again, there's volatility within that 10%. Absolutely. We are not implying that options trading doesn't entail risk. But if you step back and you say, hey, have an approach here to exploit the inefficiencies that arise from folks like that were short Palantir and Nvidia today, and those crying that the market is overvalued and complaining that we are overdue for a pullback and yada yada. Okay, me, it's a manipulation that can be exploited. And oh, by the way, that's exactly what I did today. The futures market was way oversold heading into the open because of this news of a big short position in Palantir and Nvidia. And the algorithms have no ability to understand nuance, at least not yet. Okay, that may be coming. And I know there are some AI firms out there that are self-learning and able to recognize multidimensional situations where there is nuance, right, and subjectivity, okay, where the computer models are going to struggle mightily. But I digress. For our strategy of getting that 10% return, it was very simple to read our daily market scorecard and recognize that the quote unquote best interpretation of the data that was presented to us prior to the market opening was nowhere near suggestive of a 125 basis point decline in the S&P 500. And I won't go into details of that analysis, but suffice it to say, it was an opportunity for an option trade that generated ultimately 65% today. Okay, not 10%, but 65%. So this little journey regarding risk is fascinating to me, not implying that there isn't risk, but again, how would you rather go about it? The $100,000 portfolio that's buy and hold and sits there in the face of maximum risk and minimal returns, because that's where we're at in the market, or, hey, I can take $400 a day and generate my 10% on average. And as I just showed you, there are going to be times when you generate 65%. And full transparency, there are times that $400, poof, gone. And again, the uninitiated will tell you, oh my, you're talking about a 100% loser. That's maximum risk. What are you doing? Yeah, a quantua, my friend. That is not maximum risk. Maybe in the textbooks, that's what it'll tell you. But I know if I keep deploying my $400 over time, I can generate that 10% on average return, the $40. And at the end of the year, there's my $10,000. The other thing that I find fascinating about risk is that when you are trading intraday, almost every single sell-off that I've experienced in the markets has come about from an event that happened after the markets were closed, meaning there was no ability to react. One had to wait until the markets opened, and by the time the markets opened, the crash was already, or the correction was in full swing, and it was too late, okay? To me is maximum risk. And over here, in my $400 allocation each day, in search of 10% and that $40 nominal return, okay, exposed to that overnight market risk. So again, which is more risk? The one where you're taking overnight exposure, and who knows what happens overnight, right? Lots of things, lots of scary things can happen overnight. As they say, nothing good happens after midnight, right? So again, I'm not trying to make the argument that intraday trading in this style is risk-free. But if you look at risk in a different way, I could make the argument that doing just that is less risky than the alternative of buy and hold forever in a passive investment strategy. And by the way, I think you'll understand as we go along here, once we build up our bankroll, and this is the art of building $1 million portfolio, then we can allocate more than just that $400. And now we're really cooking. And again, we're doing it in a way where I would argue we're not taking any more risk, and maybe I could make the argument that we're taking less risk than what the textbooks are telling you. So that's my thought on risk, and it all came about thanks to the action in Palantir. So thank you, Andrew Karp, and everything you do for that magnificent company, Palantir. It made for trading intraday today and a profitable day, and it made for a great topic for my video today. This is JD for Fireside Trading. Thanks for joining me. Take care. Good luck with all of your trading, and I'll see you next time.